Have you noticed the brand new vehicle you've been eyeing suddenly becoming more within your budget? The largest auto market collapse in our history is underway, likely to cause car prices to nosedive by an impressive 50%. Influences such as supply chain complications, a transition to electric vehicles, and diminished demand due to the pandemic leave the future of the car industry up in the air. In this video, we'll probe deeply into the car market's present state and its implications for you, the buyer. Prepare for this revealing insight that could help you save thousands on your next car acquisition. Please give our video a like and remember to subscribe to our channel. Significant transformations are happening in the car industry as supply chain stress eases, leading to more available vehicles. However, this transition has triggered an unexpected inventory upsurge, prompting a swift and unprecedented decrease in car prices. This reduction is occurring quicker than forecasted, with dealers finding it hard to handle the increasing wave of new vehicles. Consequently, the market price of vehicles is dropping at a concerning pace, with some cars losing up to a fifth of their worth within the first year of purchase. This trend may continue until the industry manages to balance its supply and demand, which might take a few years. Moreover, it's likely that this shift in the car market will result in further changes, such as heightened competition and consolidation among dealers as they search for innovative ways to maintain profitability in an increasingly tough market. As the automobile industry's supply chain strain decreases, the market is now experiencing the opposite of a shortage: too much inventory. However, this unexpected supply surge has caused a sharp decline in car values. Research from UBS has indicated that global car production would exceed sales by 6% in 2023. This surplus will result in nearly 5 million cars, requiring price cuts to balance the market. However, these price reductions might not occur until the latter half of 2023. Industry specialists and analysts have recently suggested that the car industry is headed towards a substantial collapse. This projection is not shocking considering the unexpected events of early 2020, which shook the world economy and resulted in shortages of critical goods. The car market took a heavy hit from these disturbances, primarily due to the global lack of semiconductor chips. This chip shortage has wreaked havoc on the car market, forcing many manufacturers to decrease or even stop production, leading to a significant drop in the availability of new cars. This deficit has caused used car demand to spike dramatically. The second-hand car market has seen a significant increase as consumers scramble to find any available models. Additionally, with the dwindling supply of new cars, used car prices have surged, indicating a considerable market shift. The present financial insecurities have intensified the trend of people seeking options beyond expensive new vehicles due to high costs. Furthermore, the pandemic has negatively affected the auto industry, amplifying pre-existing problems. The economic turmoil prompted by the health crisis has affected household expenditure. Given the financial instability, an increasing number of individuals are opting for pre-owned cars, a cost-effective solution. Dealerships, despite facing physical limitations due to lockdown restrictions, had to evolve their sales strategies to survive the recession. Despite physical limitations, they managed to continue sales operations. Regulatory measures were put in place, and normal business resumed in 2021. Post this, both the new and second-hand car markets experienced significant price hikes. The global shortage of shipping chips and the consequent disruption have left a lasting impact on car purchases. This effect has been noticeable over the past 24 months. Based on the data, after hitting a peak in 2022, prices have begun to recede. The market for brand new and used vehicles is now better than it was a year prior. Over the past 3 years, car prices have skyrocketed, forming what some analysts believe is the industry's largest bubble ever. However, an analysis of the statistics suggests that this bubble is ready to burst, which will lead to a severe decline in car prices. Some experts predict a staggering 88% decrease in the value of some car models, a process which has already begun. Prices of used cars have surged due to increased demand and insufficient supply. It's also worth pointing out that current geopolitical shifts are causing chip shortages, thereby affecting the auto industry. Car dealerships are now offering zero-interest loans for up to 84 months to encourage buyers to complete transactions. Such extended repayment plans became a necessity. Car sellers have started offering enticing finance and leasing plans to lure new customers, making the car buying process more attractive. These deals also offer various incentives and price cuts. With the global auto industry transitioning from limited availability to a surplus of inventory, everyone is questioning when the unavoidable market crash will occur. Expert reports suggest that a substantial market correction has already started, with the impending fallout expected to be worse than the 2008 auto industry crisis. Even as supply chain issues are resolved, the sudden overflow of inventory has led to a quick decrease in car values, faster than originally predicted. This swift market change is causing alarm among investors and auto industry professionals who are apprehensive about the looming economic fallout. The future of the car market remains uncertain due to the current state. Multiple factors, such as fluctuating consumer demands, worldwide financial conditions, and possible disruptions in the supply chain, make it challenging to predict the exact timing and intensity of the market crash. However, industry experts continue to scrutinize and keep track of market trends in the hopes of gaining insights that might help us navigate the turbulent times ahead. Car manufacturers are preparing for a potential price war. Several electric vehicle manufacturers have already started offering price reductions to customers. UPS reports indicate that the pricing battle in the electric vehicle market has already commenced and is expected to reach the traditional engine market by the second quarter of 2023. Tesla's recent price reduction for its new vehicles is a notable illustration of the declining values in the auto industry. For instance, since the start of the year, the value of the Tesla Model X has fallen by nearly $14,000, or about 23%. This trend aligns with the continual price drops seen in new Tesla vehicles. The value of used Teslas is also decreasing. Particularly vulnerable to this downtrend is the Model 3. Used Model 3 vehicles are now almost $11,000 cheaper than they were a year ago. Decreasing prices are not solely a Tesla phenomenon. Take the 2022 Infiniti QX80, which typically cost $52,874 in the used car market. Within just a year, the value of this sought-after large Infiniti SUV saw a significant drop. The price plummeted by a shocking $12,000, settling at an average of $41,094 in April. This drastic drop corresponds to a 22.3% decrease. Furthermore, this trend is not confined to the Infiniti SUV. Other well-known car models are expected to follow suit. The Nissan Frontier, a popular vehicle priced around $39,833, is also predicted to witness a sizable price cut by the end of 2023, estimated to fall to approximately $27,146. Industry analysts foresee a turbulent time ahead for the used car market, with significant price volatility on the horizon. A case in point is the Toyota Camry. Currently, 3-year-old models demand a steep price of $27,404. However, if predictions hold true, these vehicles' value may nosedive to a low of $16,548 by the end of 2023. This sharp decrease underlines the instability anticipated in the used car sector going forward. In 2020, the value of used vehicles experienced an incredible 88% uptick, grabbing the attention of car aficionados and investors alike. However, this trend may not endure in the coming months, with a considerable drop in car values likely. Hence, it is advised that individuals brace themselves for this market shift, particularly those considering purchasing or selling a vehicle. Despite the potential drop in car values, the current situation could benefit those looking to buy a new or used car. It's an opportune time to patiently monitor the market, tracking any changes. This could potentially offer a golden chance to land a fantastic deal, which may not have been possible in previous years. Therefore, it's essential to be aware that the current market dynamics may shift, and we must all prepare accordingly. Patience and market observation could present an optimal opportunity for individuals to secure a fair deal on a vehicle. Thanks for tuning in. Don't forget to like, subscribe, and leave your comments below. Also, make sure to check out this next video.